Hi there, welcome to Kneppy Invest and welcome to August 28, 2024. We have about 1 hour and 32 minutes left of trading today. And after today, we have 2 more days left in August reporting month. And we will see quite a few companies release their financial results in those 2 days. I expect both days to be quite busy. Now, I am working on Friday. More than likely, that shift will be done at home. So I'll be able to do this video, this ASX daily, not this particular video, but I'll be able to do Friday's ASX daily rundown video during my lunch break, which I usually take about 3 p.m. And maybe I should also mention or announce that I did have a fair bit of leave from work. I haven't taken any leave for 2.5 years. In fact, when I actually do go on leave next year, it'll be 3 years since I last went on leave. And I've accrued so much leave that I'm able to take 1 year's leave. I won't say I was forced to, but I was tapped on the shoulder and was told that I have a lot of leave and I should think about taking leave. And I went, why not take a year's leave? I have no plans at this point in what I'm going to do in that 1 year. I might go for a holiday somewhere, a little bit of a trip somewhere, but I have no plans to stop doing these videos. Anyway, so what is the plan for today's video? So what I'll do is I'll go through the CommSec watch list of all companies that have released results today. And we have seen a fair bit of movement among these companies, which is quite normal. Then we'll have a look at the ASX today, look at the best and worst performing sectors, indices, and also companies. And we are seeing a sea of red, particularly mining down a fair bit today. And then we'll have a look at those companies who have moved the needle upon the release of their financial results. So I have jotted down 9 potential companies out of 6, 12, 18, 24, 30 companies that have released the results today. In fact, there's probably a little bit more than that, but I haven't written them all down. A few other companies released interesting announcements. I might touch upon those companies if I have any time. Okay, so let's start this video looking at those companies that have released results today. And I put it into the watch list in CommSec. And I can't believe I haven't thought of this earlier, but it just makes it so much easier to see how these companies have performed instead of doing it numerous other ways. This just makes it so easier. For instance, the other thing I should also mention, I can just go back to yesterday, see if any companies who released their results yesterday have either bounced or have dropped. For instance, we have seen Macmillan Shakespeare down 9.4%. Johns Lyng Group down another 6.1%, so no bounce there. Lovisa down a little bit, but we have seen Zip bounce up 13.6%. I think another one, yeah, Drone Shield has bounced as well, 10.4%. Although I have heard that Drone Shield bounce was on the back of an upgrade from an analysis or something like that. That's according to Capital Brief. Drone Shield bounces on back of Bell Potter upgrade. Yes, share prices of companies can do that. Some analysis can do an upgrade or downgrade. Share price will drop or rise. It just blows my mind that people will buy on the back of that. It blows my mind, but I sort of understand. Let other people do your work, and you can just react on those bits of work from analysis and analysis. Anyway, let's go back to today, and let's see which companies have performed well and which companies have not. And what I might do is rank this by percentage change, starting at the worst. So we have Tabcorp, not surprising there. I had a look at their results and I went, yuck, down 12.9%. And of course, sometimes I'm going to be wrong because I have a look at the results and the market, even though the results might be terrible, the market might have thought it was going to be worse and then the share price could rally. So sometimes you will see that. But I saw Tabcorp results and I went, there's no way the market would have predicted this. So no surprise, it's down 12.9%. NTD, which used to be National Tire and something, changed the name to something else. National Tire and Wheels or something. NTAW Holdings. So I wish they didn't change the name. Share price down 11%. No surprise. EML Playments, a little bit volatility there. Share price down 7.7%. But when the share price opened, it actually rose. So again, it's one of those situations when the share price rallied on open and then people looked at it and went, no, it's not that good. Share price has dropped 7.7%, down to 71.5 cents. But I'm not trading that now. Why is it down? Max 7 down. NextDC down. That's an interesting one. I might talk about NextDC. And Adairs was down by a significant amount, so it has rallied. Share price got down to a low of $1.72. Now it's $1.98. So share price of that company has rallied. I had no plans to look at Adairs. So I might have a look at Adairs if I have time. How about that? Otherwise, not much movements in Karoon, Credit Corp, APA, Qoria, Aquarian, company called Higher MI, SciDev. So let's have a look at the best performing companies today. We have Chic up 56.9%, and I did put that down, so I definitely have to talk about that company. EZZ Life Sciences, a company I do own, up 22%. Fun enough, you could have bought at $2 earlier in today. So share price of that company has bounced. I'm not overly surprised. Duratec is another company whose share price actually fell on open. Yes, fell on open to $1.11. And how are you feeling now if you sold EZZ Life Sciences or Duratec at the lows? You have missed for EZZ Life Sciences, that's a 15% rise. And for Duratec, that is like a 20% rise or something. 20%? Yeah, almost 20% rise from the lows. Perseus, pretty good day there, up 7.3%. And then we have COG Financial, Frontier Digital, Sonomed, all up pretty nicely, but nothing significant there. Woolworths is up 3.24%. I do find that surprising. All the numbers were down, which is interesting to see that the market has responded well, but I think it's because of the special dividend. And it's another company, one of these large companies, that are trying to get favor with shareholders by increasing the dividends when they probably shouldn't be. Yes, I'm saying that. They probably should be increasing the dividends, but I have a feeling they're trying to manipulate the share price. CBA did it. Their profits fell, but they raised their dividend. Anyway, in fact, I think there was a little bit of an article on that in here. Here it is. Woolworths shares gain on earnings lift and special dividend. I actually did read this, and it was interesting because I was trying to grapple why the share price is rallying. And in fact, there was so weighing these factors up, this is from, who's this from? E&P. Weighing these factors up with expected consensus downgrades of 2 to 3%, we expect Woolworths may drift lower once the special dividend goes X. So a lot of people are piling to Woolworths just to get the special dividend. Again, Australians are obsessed with dividends, and that's what these companies are doing. They're taking advantage of that to get the share price to rally. So it's another company I would not buy in right now. CBA, Woolworths, any banks, or not buying at this point in time. I don't care how good the company is. I had a look at the PE ratio of Woolworths. It's like 25, 26. So you're going to see Woolworths grow maybe 1 to 2% per year. So at inflation, or maybe just a little bit above inflation. So with that sort of company at a PE ratio of 25 to 26, the forward returns are going to be quite low. It's just not worth any sort of risk you might have. Anyway, so that's the companies that have performed well. I've got about 10 companies that I might talk about, including Adairs. So NextDC, Tabcorp, Duratec, Perseus, National Tire and Diagnostics, or whatever it's called now, NTAW, EZZ, Chic, performed really well, EML Payments, and Woolworths, and Adairs. Okay. In fact, I've already talked about Woolworths, so maybe I don't have to talk about that company anymore. Let's have a look at the ASX today. So down, red. I'm a little bit surprised here because I think the American markets were up. Yeah, NASDAQ up 0.33%, Dow Jones up a little bit, 0.202%, S&P up 0.16%, gold down a little bit, not much. Copper down a little bit, not all that much. And in fact, at one point today, the indices were down, the XGO was down about 0.7%. So I don't understand why there was so much negativity in Australian markets today, but we have seen the markets or the indices rise during the day, and they keep on rising. Yeah. So it's only down 0.34% right now. So, if you take it from the low of the day, it's actually been an okay day. If you take it from the low, it's all about timing. Anyway, let's have a look at the difference. Let's have a look at the best performing and worst performing sectors in indices. Staples had a good day. So more than likely, that's on the back of Woolworths. I would actually almost say that's wholly on the back of Woolworths. So let's have a look. I suppose Endeavour Group's had an okay day. Treasury Wines, not so much. But yeah, Woolworths up 2.96%. And it is by far the biggest company among the staples. Coles Group up a little bit. But I've said enough about Woolworths for now. Utilities, real estate, financials, all up a little bit. A lot of sectors down a fair bit, though. So telecommunications down 1.72%, energy down 1.2%, materials down 1%. What is causing telecommunications to be down 1.72%? Let's have a look. Telstra, is Telstra down? It is down 3%. I'm wondering if Telstra's gone ex-dividend, which can have a significant effect on the performance of the sector. I would assume it's gone ex-dividend. Let's have a look. 28th, yep, it's gone ex-dividend, so we don't really need to look at that. And that's a simple explanation why telecommunications is down today is Telstra. That's it, Telstra. I'm probably being a little bit unfair. Spark New Zealand is down, REA Group's down, Car Group's down, so I suppose, yeah. Sectors or indices, how is gold? So gold's up, that's good. So rest of mining's down, gold is up. And let's have a look at the ASX 20, down 0.35%. We already know Woolworths is up. I would assume it's some of the banks. How did financials do? I forget. Financials up a little bit. So maybe 2 banks up, 2 banks down. It would say most of the iron ore companies are down. Most of the energy companies down, Woodside, Santos. I'm going to say 14 companies down, 6 up. Oh, close. And the best performing companies, Woolworths, we already know that, Goodman Group, ANZ, Westpac, and Coles Group. So my 2 banks up, 2 banks down is spot on. I've got to give myself credit there. And there's Telstra gone ex-dividend. Some of these other companies might have gone ex-dividend as well, but iron ore's probably had a weak day in itself, the commodity, because BHP, Fortescue, and Rio Tinto all down by over 1%. And there's Woodside down by 1.1%. Okay, so that is the ASX today. Well, actually, no, it's not. I forgot about the individual companies. Top gainers and top losers. Let's have a look at this. We already know which companies have moved on the back of their results. I'm going to see if there's any other companies that have moved, like Felix Gold, up 74%. They must have released something because there's been pretty big turnover for this company. So let's have a look at Felix Gold. I would say this is some sort of drilling result. So I'm just guessing maybe an acquisition. Let's have a look. High grade antimony assay results up to 15.99% SB. Is SB antimony? Antimony. It's really weird. I have very rarely have heard of antimony in companies or on the antimony drilling companies on the ASX. But in the past year, I've seen so many of these sort of announcements. So there must be something special about this particular element. Yeah, there must be. It must be because it must be a recent development. I don't know. I've just heard antimony being mentioned time and time again by companies. So Felix Gold, FXG. Let's have, and if you know anything about antimony, I could Google it and have a read, but I'm a little bit too lazy right now. And I want to finish this video within an hour. Interesting chart for Felix Gold. You would think it is a gold company, but looks like it's antimony. Am I even saying that right? I have no idea. Share price has been up as high as 10.5 cents, has fallen below 10 cents. So that will be a struggle possibly moving forward for Felix Gold. 10 cents is a very powerful resistance level for any company. And it's been below 10 cents for quite a while. Yeah, for over a year. So there will be resistance, but at least the share price is at a 1-year high and pretty big volume. This is the case where if you're interested in this sort of company, this could be defined as a breakout, and there's trading view just not being able to fit data to screen. So I have to change the settings. There we go. Happens all the time. If you look at the long-term chart, share price has been a downtrend. So this could be the end of the downtrend. So maybe this is a turning point for Felix Gold, and it's not to do with gold, it's to do with antimony. Antimony. No, it doesn't sound right. Elsewhere, no interest here. The market did release results today, MKT, but fairly low turnover. So let's move on. ECS Botanics released results today. I did actually write it down, but I didn't make it into my watch list. And I did write it down, and I did circle it because I went, oh, this is a small cap company that is profitable. So not completely surprised the share price is up 26.92%. So let's have a look at ECS. I have done a few videos on this company before. Individual companies. Let's have a look. ECS. There we go. Introduction, 26th of June 2023. And then I did a video on the July 12th and also on the February the 1st. And the main reason I did these videos is because I thought the company was moving towards an inflection point and becoming profitable. And it seems like the market has liked quite a bit their results today, although the share price is only up 0.4 cents. And yeah, so this is what happens when the share price is so low. The share price can increase by a fair bit on not much, what seems like little movement in share price, only up 0.4 cents. Okay, so let's have a look at this particular announcement. And I'll just show you what I read. So record harvest, profit and revenue. In fact, the title sounds pretty good in itself. So ECS Botanics is cannabis cultivator, manufacturer, grower, seller, that sort of thing. I'm pretty sure they are quite vertically integrated. I am trying to delve into my memory, which can be quite hazy at times. So let's see what they talk about or how they describe themselves. Australian medicinal cannabis. Well, I didn't say that word, did I? Medicinal. Maybe that's important. Maybe it's not. Medicinal cannabis cultivator and manufacturer. At least I've got two words, right? Located in Northwest Victoria. I don't care where they're located. They don't mention anything here about being vertically integrated. So maybe that's wrong. Anyway, let's go back to see why I got a little bit excited. What was it? Well, no, let's have a look. I didn't have a look at the financial statements. We can do that right now. So revenue up 31.4%. And the company was profitable by $2 million, which is pretty significant. Profitable by $2 million, percentage change of 2,534%. So if they increase their profit in financial year 25 by 2,534%, this company could be the cheapest company in the history of equity markets since the first equity market in Netherlands in 1600 something. But of course, it won't grow that much because it's on we grew from a low base. In fact, it grew from a negative base. So $2 million is a pretty good job for this company. Is it sustainable? That's probably the next question here. Nice growth in revenue, nice growth in receipts. This is legitimate profit, it looks like. I'm doing this fairly quickly though. They do have an inventory impairment, which increased by, well, doubled from last year. But they also have a fair value gain on biological assets. So those two sort of cancel each other out almost. So there is, 6 and 5. Have a look at notes 5 and 6 on both of those. That's interesting. Let's have a look at the equity. Nice equity of 28.2 million, growing nicely, up 6 million. And cash flow, negative. I would say the cash flow is negative because of changes in working capital. And I would say more than likely it's increase in inventory. Let's go back up to the balance sheet. Inventory actually increased by 5 million from 7.9 to 12.9. In fact, I should have just said 8 to 13 million. And there wasn't much change in trade and other receivables and trade and other payables. So that will have a negative impact on the cash flow statement. When you increase your inventory, I think I mentioned this yesterday. So if they didn't increase the inventory, this company would have been cash flow positive by, say, 3.6 million. So you do have to take that into account. Just don't look at the cash flow statement, see that the operating cash flow negative and think that's negative. It's not. They've increased their inventory by a fair bit, almost doubled their inventory. So you have to take that into account. Changes in working capital are important. What else do they say in the first bit here? Gross margins increased from 18% to 35%. Record harvest of 6.6 tons. Nice. Okay, so I was not going to talk about ECS Botanics. I completely forgot about it, but I do see it circled on my list here. There you go, circled on the list. In fact, it's circled right next to Spartan Resources. They did not release results, but they released, I thought, might get the market interested, but it didn't. Pepper delivers 27 meters at 39.15 grams per tons of gold. I thought, oh, that looks interesting, or the numbers look interesting, but yeah, the market hasn't reacted at all. Okay. So spend a little bit more time on ECS Botanics than I was going to. There's EZZ Life Sciences. I'll talk a little bit more about that company. And that's it. Biome up. Maybe Biome's up because EZZ Life Sciences up. I don't know. Let's have a look by market cap and see if there's any other companies here. We've already talked about Perseus, Zip, Drone Shield. Pantoro is a gold company. Step One's had a good day today. Duratec, yep. Bladeside Studios, nice little bounce. Aurora by Surgery. Whoever likes FBRs had a good day today. Same with Titomic, but nothing that I haven't. Adore Beauty had a nice little rally the other day on their results. And my friend who likes Andy and Silver has had another good day today. In AccuSensus, let's not talk about AccuSensus. Okay, so let's see if any companies that I have not mentioned have had a bad day. Frontier Energy down 38.46%. I have a feeling this is down on a capital raising. I have a feeling it's down on capital raising. I could be, yep, there it is. Frontier completes $40 million placement. So I'm assuming the placement was done maybe between 25 and 30 cents. So let's have a look at what price this placement was made at. 25 cents, yeah. It's interesting. The reason I said 25 cents is simple enough. So the share price is at 28 cents. If the market viewed this placement negative, then maybe the placement was done at 30 cents, and now the share price is below that placement price. If the market thought, oh, this placement might be pretty good, I would have expected the share price to be a fair bit above the placement price. That's why I said 25. Could have been even lower, but done a pretty big discount because the share price is down at 38.46%. And that is a negative thing about a company doing capital raising. Sometimes they do it at a massive discount and the share price decreases a lot. And I won't say you're forced to take part in the capital raising, but they will say, well, if you don't, you're going to be significantly diluted. And I don't like that. Anyway, we have Tabcorp down here. Yep, nothing else here of interest. Let's have a look by market cap. Tabcorp, Mega Million Shakespeare, Johns Lyng Group. We've already talked about those. EML Payments, NTAW Education. Haven't talked about that. Appium Animal Health. Probably the only one there is NTAW Education, although it's on low volume. Should I look at it? Have they released anything? It's not the sort of company I like. And there was a change of director's interest notice. Did he sell something? And is that spooked the market? No, he acquired shares. Okay, let's move on. Let's move on to some of the companies that have released results today. Before we do that, I'm just going to touch upon a few companies that I thought released sort of interesting announcements today. Okay, so let's start with Synlait Milk. Share price is down 4.11%. They received a notice of complaint. And seems like a shareholder is not happy with Synlait Milk and some sort of meeting they did, special shareholders meeting to be held on 18th of September. So it looks like this meeting hasn't taken place yet. The notice of complaint asserts that under New Zealand Stock Exchange listing rules and takeovers code, Bryce and A2 Milk C should not be able to vote on resolutions relating to the recapitalisation, leaving only shareholders other than Bright and A2 Milk being able to vote on the two resolutions. So there must be some reason behind that. So a little bit of, I don't know what you call this, but a little bit of tension within Synlait Milk's shareholder ranks. I wonder what other shareholders of Synlait Milk are thinking about that. And saying that, I'm not sure why there's anyone holding these shares at this point in time, because the share price or the chart looks horrendous. It's a nice little rally in the share price, although. Nice little rally in the share price. And share price has pulled back. I'd say there is a possibility the low has been reached for Synlait Milk, and that low is around about 20 cents. Share price now 35 cents. So maybe there are shareholders out there who bought near the low, and they've done fairly well. Accent Group. I want to see what the share price has done here. Nothing. A strategic shareholding by Frasers Group. This has me interested or wondering. So Frasers Group has acquired 14.65% strategic shareholding. Is that strategic for Frasers Group, which is a publicly listed company on the London Stock Exchange? So I'm wondering, is this a strategic holding for Frasers Group with intentions to taking out Accent Group in the future? The other interesting thing here is Brett Blundy has indicated that he'll be retiring from the Accent board in due course. The board wishes to thank Mr. Blundy and BBRC. That's actually not relevant. I think the other relevant thing here was that a member or someone from Frasers Group will move onto the board of Accent Group. Okay, so that's interesting goings on with Accent Group. I thought maybe the share price would pop up because maybe this is an indication the company will be taken over in the future. Just a maybe. I don't know. No idea. Kalina Power update. Remember they were suspended from trading because ASX said you did not provide enough information in regards to your announcement the other day about your MOU with the US data center developer. I thought maybe it was because they had not named who the US data center developer is. And we have confirmation that's exactly what it was. And they have announced who it is, and it is Crusoe Energy Systems. That's all they needed to provide. So I'm wondering if, Crusoe Energy said to Kalina Power originally, no, don't name us. And then when they had this bit of an issue with ASX, Crusoe Energy Systems just changed their mind. Said, oh, go name us. We don't care. I have seen, this is many, 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 many years ago, a company actually named the counterparty to a contract or something, and the counterparty was so upset that they pulled out of the contract. And I believe, if I remember correctly, that destroyed the company in the long term. So sometimes, naming the company it may not be the best, but the ASX probably wants you to name the company, it seems like, based off that. So that's Kalina Power. The other one is a company I've started to follow a little bit more closely. SenSen. Oh, SenSen is flat. Got as high as 4.4 cents today. So people have been selling, maybe taking profits. Chart looks pretty good. In fact, I didn't look at the chart accent. Should look at the chart accent, but that's okay. But they announced a contract in Montreal. It's an interesting contract, numbers-wise. So they do produce numbers here. So $1.7 million per year, total contract value up to $17.7 million over 5 years. So contract term is 3 years with additional 2 years of optional extension. Now, I'm not sure what the margins are going to be in this. It's sort of an interesting what they're doing. So SenSen, under the contract, will supply and commission several mobile parking enforcement systems and support their operations for the first 12 months and has already commenced work on the project. So I'm not sure how much margins is going to be for this type of work, but I'm starting to follow this company a little bit more closely and just have a look at the chart. And one of the reasons is because the company is, well, in the last quarter, they were operating cash flow positive. Now, I'd like to see that continue the next few quarters and momentum maintaining over the next few years. And the chart is starting to look a little bit more interesting. Possible turnaround. Share price at 4.4 cents is about an 8 to 10 month high. A little bit of selling today, which is a small concern, but there's a lot of illiquidity in this company, and I think that will continue moving forward. Okay, so let's get to some of the companies. NextDC, they released their results last night. Share price down 4.1%. The results were pretty good because they beat guidance. So they did beat guidance. I'm trying to remember if it was in the announcement or the presentation. So because they released their results at 7 p.m. or close to 7 p.m., I actually had a closer look at these results. So all the companies that released results in the morning, I have not had a look. Well, not a close look anyway. So I had a closer look at these results. And I am a shareholder. And was it in there? Yeah, it was in this. So financial year 20, I really like how they did this. Financial year 24 results versus guidance. So revenue was within the guidance range. Net revenue was higher than the guidance. Underlying EBITDA was higher than guidance. And capital expenditure was higher as guidance as well, which is probably a little bit of negative. And they actually mentioned he exceeded top end of financial year 24 underlying EBITDA. So it looks good. My only concern was the forward guidance looked pretty weak, but I had no idea what the expectations were. Here it is. So they're talking about revenue increasing maybe 10%, just above 10%, from 308 million to 340 to 350 million, but underlying EBITDA increasing by a smidgen from 204 million to between 210 and 220 million. So not even 10%, which I thought, well, that could be concerning. And I did see a Capital Brief article saying that's exactly what happened. NextDC shares dip on lower than expected financial year 25 guidance. Now, if that guidance was sort of to what was expected, then I think we would have seen the share price rally because we did see the company reach the goals for financial year 24. In fact, exceed the goals in some of those metrics. But I think that guidance has spooked the market a little bit. Share price down 4%. Let's have a look at the chart for NextDC. And what you can say is share price is going sideways. Well, it's in a long-term uptrend. And other than that, share price, long-term uptrend, definitely. So if you go, this is the weekly chart going all the way back to 2015. In fact, the share price broke out It moved into an uptrend, a weekly uptrend in the start of 2015. And if you bought shares on that, you've done very well because the share price at that point was $1.80. So this would have been a 10 bagger for you if you held the last 10 years. So nice looking chart over a 10-year period. And even now, the share price still an uptrend. So I'm not concerned. This is more of a longer term play for me. But the market sometimes can be fickle at the short term. Let's have a look at Tabcorp. Okay, I could have been a bit unfair with Tabcorp because I had a look at their results and I went, oh, I was literally, this is ugly. I was wondering how the market was going to react. And I think the market reacted just as much, had as much negativity as I did. I didn't see any Tabcorp here. Oh, there it is. Tabcorp shares slump after bigger than expected loss. Okay, so there it is. And I just went to one of these tables here, and I went, ew, geez, that's horrendous. So let's have a look. So revenue down 4% straight away. That's a fairly negative sign. EBITDA down 18.7%. EBIT down 35%. Profit down 68.8% to $28 million. Now, that's before significant items, by the way. So that's probably the real profit because their reported profit is negative $1.4 billion. Yes, $1.4 billion loss. So that's significant items. They do mention in the notes here, comprises impairment of $1.376.4 million. So that's a one-off thing. That's not shouldn't say it's not a real thing, but it's a one-off thing. It's not really how the company has performed. But the before the significant items is significant. $28 million. So if he actually did, I wonder what the market cap of this company is. Let's have a look. I've got to find it first. Here it is. On the market index, NXT. The market cap of this company is the wrong one. Tabcorp. What am I doing? Tabcorp has a market cap of 1.12 billion, and they have a profit of 28 million. Now, this is you should not do this, by the way. So you could argue 1.12 billion divided by 0.028. This company has a PE ratio of 40. Yes, 40. So you could say, well, this company is really overvalued. But here's the thing, and this actually happens also with mining companies. When there's a bit of a down cycle or, a downturn in mining companies, they actually look really expensive, but don't be fooled by that. In fact, they could be really cheap. So this company could increase their profit next year. They could actually triple their profit because it fell by 66%. So there is a possibility this could be a one-off with their profit, and profit now triple. So if you just look at 84.3 million, so what was their market cap again? I can't believe my memory is terrible. 1.12 billion. Where's my? Oh, should move this. There we go. There we go. So 1.12. No, we've got 1.12 divided by 0.084. P ratio of 13.3. There you go. Would I buy this company at a P ratio of 13.3? Probably not, but who knows? You could be someone completely different. The whole point of me doing these videos is to share ideas with you. So let's have a look at the chart. And I can almost guarantee the chart looks ugly. Has been looking ugly for a while. I think the market has been on top of this. This is the weekly chart. In fact, the weekly chart looks horrendous. It's moving towards the COVID-19 lows. The COVID-19 lows were 40 cents. It's now 49 cents. I'm pretty sure this takes into account the divestment or the what do you call it when the opposite of demerger of Tabcorp and the lottery company. I'm pretty sure this takes that into account. So the share price is moving to those COVID-19 lows. Share price was as high as $1.16 back in June last year. So share price has dropped a lot, and the chart looks pretty horrendous. I'm not sure what's causing this negativity. So again, I haven't looked in depth in these results, but I just saw those numbers and went, ooh, eek. And I think the market is on top of this. Chart looks horrendous. So Tabcorp could be moving towards a slow, could be getting close to a slow, and maybe this could be a nice trade if it starts turning around. Duratec, this is an interesting one. So I do own shares in this company. And on open, the share price went to $1.11. I went, ooh, not sure why. These were fine results. I had no complaints with these results. So revenue up, was it up at 13%, EBITDA up 22.6%, profit up, was it about 10%, just over 10%, I think. Yeah, in fact, I didn't have the percentage change here, which gross profit 17.3%, nice little increase there. Cash on hand 65.2 million. So I had no problems with this or these results, and even the P/E ratio is not that high. I would say the P/E ratio, Duratec, it's about 15 now. So share price has actually increased. So it's about 15 now. I bought some shares in this company and the P/E ratio was maybe 12. And I thought that was really low for this particular company, maybe 12. So let's have a look at the chart for Duratec. So I have traded this in the past. There's me buying some shares at 55.5 cents way back in late 2022. So this was just a breakout. I was a little bit late to the breakout, but even if you're a little bit late, it doesn't really matter. So really the breakout happened at about 48 cents. And I was a little bit late, but it's okay because look at running the share price. And then you can see the uptrend was coming to an end. First showed the signs almost a year later. Got to a high back in January of this year. It moved into a downtrend, and I think it's starting or trying to move into an uptrend right now. And today we had the complete opposite reaction to some other companies. Share price opened near the low, and then has rallied during the day. That's actually a good sign moving forward. So let's have a look at the 1 minute chart. Yeah, there was an initial sell-off right on open in the first minute. Share price actually dropped 7.1% on open. So again, just imagine you sold shares on open because you went, oh, the results look bad, I'm going to sell. Well, I'm not sure why you would think that. Maybe there could have been some stop loss selling because shares opened at $1.17 and fell fairly quickly to $1.11. So there could have been some stop losses hit there. I don't know. Or maybe retail investors saw the share price open low and went, oh, I've got to sell. The market hates it. And then look at the share price. It's rallied or during the day. So an interesting and actually a very bullish one-day candlestick. I'd love to see the share price get above 32 cents. I'd like to see the share price get to $1.36 because that would be over a 6-month high. So that's Duratec. I had no problems with their results. And again, just keep in mind, I have to look at all these results in a finer detail over the next few months. When I look at these results, it's very quick, except for NextDC, which I had more time to have a look at. By the way, I mentioned yesterday that there was a company that released their results in that table format, like this year's results, last year's results, and percentage change, except when they looked at or had earnings per share, it was done in a total change, not percentage change. It was Lovisa. I thought it was a previous day. Yeah, it was Lovisa. So I'm going to just show you that. So I like this sort of, there was the announcements. Yeah, I like this sort of table, a nice clean table. I hate when they just have the numbers in like bullet points like this. I like tables. I would assume most people like tables. And this is exactly what I like. Financial year 24 results, financial year 23 results, percentage change, but down here, earnings per share, up 12.1 cents, not a percentage change. The percentage change, I think, was about 19%. And even final dividend, up 6 cents. What's that, 20% increase? Why not just do a percentage increase? That's just me. I think you should just do the same for all of them, unless you can't. But here you can. The variance, you definitely can put a percentage change there, and I would have liked that. Anyway, that's Lovisa who did that. Perseus. I am wondering if share price up 6.1%. I'm wondering this could be on the back of capital returns. ASX investors, Australian investors, love capital returns, even though it's not really that beneficial for them. They just get money. So if a company gives a capital return of like 50%, the share price is going to drop 50%. So it's not free money. It's not free money capital returns. You see the capital for 50% if you get a 50% capital return. I don't think a lot of people fully realize that. Capital returns are not free. So one-off capital returns are not, even dividends are not free. The share price will drop when the company goes ex-dividend. They're not free. So they're doing a capital return somewhere here. $100 million to be invested in an on-market share buyback program. Okay, I'm going to make a little bit of a difference here. So if they're doing a capital return in the way of giving money back to the shareholder, that's a little bit different than doing an on-market share buyback particularly if the company is good value. In fact, that's the best thing to do for shareholders. Do a share buyback. You're buying back shares at a really good value. Actually increase value for shareholders. So this could be beneficial for shareholders of Perseus. So that's maybe why the share price is up. So again, I have not had a look at these results. Everything's up a little bit. A P ratio of 7.5. A lot of gold companies, particularly gold companies who have operations in Western Africa, tend to have really good or look really good value, but you do have that added risk, that sovereign risk that some of those countries like Burkina Faso. I can't remember where Perseus has mines. I'm pretty sure it's in the same area. Burkina Faso. Perseus mines where? Oh, Ghana and Ivory Coast. I'm not going to try to pronounce that's a French. Côte d'Ivoire. Okay, yeah, I'm not terrible at French. So that's in the same sort of area. A little bit to the southwest of Burkina Faso. I'm trying to think of my geography. Map. Oh, geography lesson. There's Burkina Faso. There it is. So Ghana, yeah, to the south, and Ivory Coast is just to the south. Also, we'll say that's south-southwest. I thought maybe a little bit more down here. So Burkina Faso, Ghana, and Ivory Coast are all in the same area. In fact, they're neighbours. Geography lesson ended for today. I do like Perseus. I do like Western African because I think there's good value in all companies, and more than likely they're going to be fine. They're not going to be anything's going to happen to the operations. This is the daily chart for Perseus. Why is the share price saying it's down at 0.43%? This is not showing what's happening today. What's happening, Perseus? Is this happening for? That's not happening for all my companies, I'm pretty sure. No, it's not, because I already showed you. I'm not sure what's happening with Perseus, because it's saying the share price is down, but it's definitely up. And this may be broken. Oh, there we go. For some reason, it broke for that. Chart looks pretty good for Perseus. A nice looking chart. So good work, Perseus. You've done a good job. So not as bad as I thought it was going to be. I thought that capital return was a special dividend or something like that, which I'm not a big fan of. NTD, National Tyre and Wheel Holdings. Oh, I think that's what it is. National Tyre and Wheels. I am assuming it's what it is. This is another one where I think the market got this right. Maybe not too extreme. No media announcement here. I do like media releases. So I like the results, the financial statements, a media release, a presentation. Those are three things I like. I'd like to look at different things. Okay, so let's have a look at the numbers. I want to see a table. This is all I want, a table. The problem with this table here is they have no revenue. I want a table with everything in it. Here we go, results summary. Although it's profit and loss, and then they probably go to the balance sheet, and then they probably go to the cash flow statement. So revenue down, gross profit. Actually, gross profit rose. That's interesting, to 31.6%. EBIT down. Actually, EBIT up. So EBIT up, profit down. Why is this company paying $2.2 million in income tax expenses when the net profit before tax was $3.4 million? Must be a reason behind that. I'd love to know why this company needed to pay so much income tax expense, because that had a significant effect on the net profit after tax. Anyway, gross. In fact, there's some things to like about this, not the earnings per share, not the profit after tax, but there are some things to like. Operating cash flow, 35.2 million, nice little increase. EBITDA margin up. So a lot of their margins are up. So I think, what about the assets? Up a little bit. Oh, they didn't do a cash flow statement. There you go. I thought they would have. What about the outlook? So they expect operating EBITDA to be between 47 and 50 million, which is an increase from this year. So this could be a possible overreaction from the market. But again, I haven't had a close look at the announcements, but on first inspection, not as bad as I thought it was going to be. Because when I first looked at it, I just saw the profit was down. I went, move on to the next one. Chart does not look good. So this could be the reason why. Chart has been going down, and share price has bounced off 38 cents. 38 cents could be the floor, maybe the floor. So a sneaky trade you could do is buy it now at 39.5 cents and sell if the share price falls below 38 cents on strength. Possible sneaky. I was actually following this a little bit closely here, expecting a bounce off, what was it, 50 cents? It bounced, a beautiful bounce off 50 cents. In fact, the share price went from 50 cents to 65 cents, and then it fell through back in May. Yeah. National Tire and Wheels, or NTAW, not as bad as I thought. Let's have a look at EZZ. Up 21.18%, and someone did sell at $2.01 early this morning, and they are now kicking themselves in the shins. I would say they sold, in fact, you have a look at the summary, they sold very close to open. I was following the opening because I am a shareholder of this company. So I was following closely how the market reacted, and on open, 212, or 212 on open, and then there was just one little dump, about 10.09 and 10.12, and then, 10.18. It was not much, 1,600, actually, it was a little bit more than I thought. About 5,000 shares, totaling almost $9 million. But then, some more at $2.01. And share price recovered fairly quickly, got back above $2.10 at 11, 2.20 cents at 11.15, 2.30 cents at what time? 2.30 cents at 1:41 p.m. So the share price has been rallying all day. Okay, so let's have a look at the results. There are some really interesting things about this company. Now, I'm a shareholder, so I'm going to be, I'm trying to be as non-biased as I can. So I'm going to say some things I like. So revenue up 78.9%, 66.4 million, EBITDA of 10.4 million, up under 3.8%. So this is all good. Gross margins remained above 75%. I don't like that. I hate how they worded that. Gross margins remained above 75%. Well, there's a possibility gross margins fell from 99% to 75% or 75.1%. It's a vague highlight. I'll show you why. Net profit. See, all the other ones have said numbers, and I'll show you why I have a problem with that in a second. So profit, 6.9 million, up 91.8%. Operating cash flow of 6.2 million. So it's all good. Cash statement or cash position of $19 million. So have a lot of cash on hand. I'm really intrigued by the gross margin, so above 75%. This company spends a lot of their money in sales and marketing, and that can be a good thing, that can be a bad thing. So my question is, why do you have to spend so much money in sales and marketing? Why aren't people just buying? Maybe this should be more word of mouth. So what I want to see in the future for EZZ Life Sciences, two things I actually want to see. I want to see the gross margins remain at an elevated level, and I want to see sales increase at a much greater rate than sales and marketing. That is telling me that word of mouth is getting out there about this company's products. Now, this product sells stuff that I won't say it's a scam, but they sell products I would never ever buy, supplements, that sort of thing. I'm not that sort of person. I think you should get everything you need from the food you eat. That's the real supplements. Not the real supplements, but that's the way you get what you need is the food you eat. So if you're not getting the necessary things you need or need to have in your diet, change your diet. The reason I say that is my ex-partner loves supplements, absolutely. I was just said to her once, because she had like a meal, and she had a meal and then all her supplements on the side. I was like, you're like an old woman. Just imagine what you're going to be when you get older and you need to eat some supplements, some like a medicine, that sort of thing. You're going to have a sort of like the Simpsons. Remember Simpsons, if you ever seen Simpsons episode when the old nursing home with Grandpa Simpson, and they're handing out all the medicine to all the people, and there's like heaps of medicine. That's what she was like. Yeah, anyway. And the other thing is, you can get supplement toxicity. Yes, I think it's called nutritional toxicity from taking in too many nutrient toxicity. I believe too much, nutrient toxicity. I believe if you have too much vitamin A, you could have liver damage. And something a lot of people don't understand is too much of anything is a bad thing. Too much water. You can die from having too much water. Just like if you have too much any vitamin A, vitamin C, or anything, you can harm you. A lot of people don't realize that. Anyway, yeah, nutrient toxicity is a thing. And yeah, it's a growing issue as well, I have heard or read or something. Anyway, so I'm not a big fan of what this company is selling. Not a big fan, but they're succeeding in what they're doing. The other thing, I'll go to the presentation. I'll show you what I don't like and do like about this company. Okay, so let's see if I can find it here. Okay, so this financial overview, gross margin 75% plus, steady for the period. Okay, but I'll show you why that is a little bit, I wouldn't say deceptive. No, it is a little bit deceptive. So a few things I don't like about this company. Here is margins. Okay, so they have this Aeron business, which I think they just sell stuff from this company. So EZZ is what you want to see. So the EZZ gross margins fell from 84 to 80%. That is a little bit of a concern. If we see those gross margins continue for over the next few years, this company is losing any sort of competitive advantage they have. And I wouldn't be surprised to see a lot of their competitors look at this company's margins and say, oh, I want to get a piece of that pie. If this company is getting that sort of gross margins, ooh, there's some money to be had in this sort of area. And the first sign of that would be significant decrease in margin. So that could be the first negative sign for EZZ Life Sciences. But they're right, total gross margins remain at 77%. But this is the first thing to focus on. Another thing I'm not the biggest fan of this company is their lack of diversification. Well, you could say the revenue by channel, 91.1% e-commerce, only 7.7% pharmacy, and 1.2% supermarkets. But revenue by geography, they're too highly concentrated in China. 79% of the revenue comes from China. Now, they are trying to diversify. They're moving into United States, but I'd like to see that change because we have seen time and time again, companies on the ASX have had trouble when they're over-reliant on China. So that's the two things I'm not a biggest fan when it comes to EZZ Life Sciences. So even though I'm a shareholder, there are some things I don't like about this company. I've yet to sell any shares, by the way. And that's a good thing because share prices rally. By the way, let's have a look at the chart, not to forget. And probably one of the reasons why I haven't sold any shares is I haven't seen the need to sell shares based off the chart. So I bought this company, was it 2 years ago? No, I bought this company back, I thought it had been earlier than that. Well, I can't remember when I bought shares in this company. It was quite a while ago. And to be honest with shares did nothing. And then they just extremely broke out in April this year. So it's not long ago. You can see the breakout, perfect breakout. In April the 8th, share price broke out at about 70 cents or so. Share price now has almost quadrupled. There was this little bit of a pullback, which did make me a little bit nervous because there was a few big down days in there, but has been sort of normal for this company. And now it's turned around and has got to an all-time high today. So it's EZZ. Got to move on a little bit. City Chic. One thing to mention about this company, and I'm not a big fan of what they've done here. They've actually given some guidance. So everything's down. So the numbers are pretty bad. However, maybe the numbers were not as bad as expected, but they did give up some guidance. And they are targeting revenue to increase by maybe 10% or so, between 142 and 160 million. They're also expecting EBITDA. Now, they've mentioned EBITDA a little bit different. So in the results, they've got underlying EBITDA, and in their targeted EBITDA, it says EBITDA post ASB 16. Not sure if that's completely different. I'm not sure why they've worded it differently. And they're targeting that sort of EBITDA between 11 and 18 million, which is a significant improvement from this year's financial year 24 underlying EBITDA loss of 8.4 million. So I can definitely understand why the market has reacted so positively just based off. The other thing I would notice is they just said trading in first 8 weeks saw trading gross margin dollars up 28%. It's really interesting that they just used trading gross margins. So possibly all the other metrics were not that good. So management just went, find the best metric that has grown the most and we'll use that. Trading gross margins. Is it up 28%? Or maybe trading gross margins is something you need to look at when it comes to these type of companies. I don't know. If you do know, love to hear. But that's why the share price has rallied. I think it's just that forward guidance from the company. And is this a breakout for City Chic? Let's have a look. This could be the turnaround for the company. No, not necessarily so. So they released really something really negative on 24th of June. So do you think that this company has turned around in such a way, in such a short period, 2 months, that now this is the breakout? I'm not convinced just yet when it comes to City Chics, but this could be it for the company. Just could be it, but not there yet. I'm not there yet personally. Let's get through these fairly quickly. EML Payments. I'm not going to have a look at the results. Had a quick look. Saw nothing too bad, but the market has thought differently. And, interesting, share price did fall below this very important level. So for EML Payments, 75 cents is very important. We have seen share price of this company hit 75 cents during the past year and bounced, in fact, 1, 2, 3, 4, 5, 6 times in the past year and a bit, and it's bounced off 75 cents. Today it has fallen through 75 cents. Right now it's on 74 cents. So this could be a negative, yes, could be a negative breakdown for EML Payments. Before this, the chart has looked, or did look, pretty weak. So I have stopped trading EML Payments. So I'm out of this company right now. I'm just waiting. And if you just look at the broader picture here, nothing too excited. So you can see the share price up and down in a range. Top of range is $1.27. So negative day for EML Payments. And if you look at the 1 minute chart, share price actually did open. So share price opened and went to a high of 82 cents. So this was another case where I looked at, well, when I say I looked at it, I did was just look at my watch list. So the first like 10, 15 minutes of trading this morning, I just looked at my watch list and kept refreshing it. Oh, this company is up. Oh, this company is now down. Oh, it was very exciting. And we have seen it bounce. Share price went as low as 70 cents today. We have seen some good volume in the last hour. That's interesting. But it looks like the share price increased from 70 cents to 75 cents, and that was a bit of a resistance level. It's maybe already turned to resistance. So share price fell below 75 cents back at 10:15 a.m. and has tried to get back above 75 cents on 3 occasions and has failed each and every time. So possibly 75 cents has already turned to resistance. Interesting. EML Payments. Woolworths and Adairs. I'm just going to have a look at Adairs. I've already talked about Woolworths, I suppose. So Adairs is another case where we saw the share price dive bomb. In fact, the low was reached at about 10:30 a.m. at $1.72, and that was it. Selling stopped, buying came in, and the share price has scooted higher during the day. If you have a look at the 1-day chart or the daily chart, yeah, in fact, that's not a bad candlestick. So possible overreaction from the market. The results weren't that good. But again, maybe there was something else in the results that the market saw after 10:30 a.m. and went, oh, they're not that bad. So let's have a look at the announcement. Yeah, so everything's down. I think everything was down. Change. So they did a percentage change for earnings per share, and that was negative 18.5%. Dividends are up. Not sure why. The other thing to notice here is financial year 24 had 53 weeks. Financial year 23 had 52 weeks. So they have adjusted for the different weeks in the financial year, and that makes the results even worse. So everything's down. I'm trying to think of a number here. Cost of doing business was up. Gross margins actually did increase. So that's one positive thing. Gross margins increased. That's Adairs. Don't have to look at Woolworths. You probably know my thoughts on that company. I'm going to have one comment. I'm going to talk about Ben Hutchinson says, Supply Network, I gave up waiting and paid full retail price for this fully stock. You might be waiting a while for it to go on sale. Yes. And I have thought about this. I should take a position in a Supply Network, and if I see it pull back, significant amount, then add to my position. I've been thinking about doing that for a long, long time. So I think I might eventually, within the next week or so, I don't know. I think the share price will pull back eventually. I don't know. I should have bought on this pullback. I was looking at it going, oh, it's pulling back. And then it got, I think I was waiting to $20 and it just missed $20. It got to $20.25. I was being too cute at that point. And the share price has almost gone up 50% from there. Yeah, that was in July. Yeah, I don't know. Don't know when it comes to supply network. Maybe I should just take initial position, and if I do see that pullback, then I can add to my position. I'm not the biggest fan of doing that, averaging down, but Supply Network is a quality company. You're right, it's a quality company, and I don't mind doing that for quality companies. Okay, that's all I've got for this video because I've gone past 1 hour. If you have any thoughts, any questions, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.